Okay, I'm going to do something a little bit different today. I thought I would do a quick rundown of each of the major capital cities just in regards to its performance and what it's been doing. So I'll quickly go through this and I can expand on this if you want to have a chat with me on the phone. So here we've got the key market data, dwelling value in Sydney about $1.21 million. And then you can see over the past 12 months it's up by 1.3%. Yield currently, the rental yield is about 3.1%, vacancy rate is about 1.3%, and the New South Wales population year on year is up about 1.3%. Now, top reasons to invest in Sydney, okay? Because I'm not one of those guys that only likes one or two particular capital cities. There's lots of reasons to buy and there's lots of reasons not to buy. Really, it comes down to your personal risk tolerance level and the goal that you're trying to achieve. So let's look at it from an economic perspective. Nation's largest diversified economy, absolutely. New South Wales improving on home loans and retail momentum. That's from mid-2025. So all this data, by the way, is from things like the State of the States State of the States report from CommSec, SQM's report, the Pulse report, CoreLogic's data. So I just kind of take that, crunch all that, and figure out what's the most outstanding stuff. In regards to infrastructure, because infrastructure creates the most employment, and employment is the catalyst for the most amount of population growth, and population growth affects supply and demand. So Western Sydney's International WSI Airport, so $5.3 billion, that's opening in 2026. Runway is complete and they're in their testing phases currently right now. Sydney Metro West, the CBD to Parramatta, multi-$25 billion project that they've got there. They've got tunnelling and everything like that. That's 90% complete. August 2025, everything should be done there. Supply and demand, New South Wales approvals are up in June up to that June 25 period, but still below the longer run, and we definitely need to see listings go up. They're very tight at the moment, but as they are basically with the whole of the nation. Rental market, vacancy rate 1.3%, very tight, but so is everywhere else. Unit yields, obviously units are getting higher rental yields than houses. That's just the way it is in every single capital city. So units are actually getting about 4% compared to the 3% that houses are receiving. But then you've got to figure, well, what's the capital growth difference there, and make that decision for yourself. Population, solid growth led by net overseas migration. Interstate migration is negative, but overall there's net growth stable, and that's from overseas people really coming into our country. Pros, unmatched liquidity, global demand, mega projects. Cons, lowest house yields in the country, high entry price points, which mean not only deposits but also stamp duties, etc. Big project delivery planning is basically putting everything at risk, because if something doesn't happen and people are banking on that, how's that going to affect the market? So now let's look at Melbourne. Market dwelling values show that they're about $797, let's call it $800,000. 12-month growth is actually down 0.4%. Rental yields at 3.7, vacancy rate 1.5, and the Victorian population is increasing 1.9% year on year. Now, top reasons to invest, focusing on infrastructure first. Metro, the tunnel there, $15 to $16 billion. That opens now, 2025. Testing is already underway for that. They've got the Northeast Link, $26.2 billion. That completes in 2028. Supply and demand, unit pipeline aids affordability. So, there are more units that are being built there. Detached supply is certainly constrained amid build costs. So people building, freehold house and land, that's obviously going up. Approvals, Pulse still lumpy, so that's obviously a bit of an issue. Rental markets, well, the vacancy rates are at 1.5, which again is still good. Unit yields above Sydney from 4% to 4.9% in Melbourne, so the unit yields are actually quite attractive. If you put down a 20-25% deposit on there, you're close to positively geared. So that's quite attractive for a lot of people that just want to see a bit of a set and forget. Population is strong. Net overseas migration is underpinning demand. And the data that we've looked at over the past couple of years now shows that Melbourne will have the largest amount of net overseas migration. So certainly something that's going to help that out. Looking at economic depth, large diversified economy, mid-pack with solid retail momentum. Pros, high population growth 2025 to 2028 and beyond. Transport uplift, relative value compared to Sydney. The difference in price point is quite high, with Melbourne now basically being the cheapest capital city out of the top 5 to buy in. Cons, softer recent growth. And here's the big thing, guys. Policy, land tax, levy settings, just the way the government runs things down there. The Victorian government has the highest amount of debt in Australia, okay? And the way that they plan things is insane. I saw that they just spent $13 million in regards to taxpayer money on bins for people to deposit their machetes. Just crazy stuff like that. Doesn't mean I wouldn't buy there. I am buying there. I'm just about to buy something there now, actually. But what I'm saying is that those things need to get taken care of before we see a market go up. And the reason I'm buying there is because even though it looks bad at the moment, I'm pretty sure it can't last forever. So I'm going to get in while it is bad. Now, cons, as I said, softer recent growth and risks again on mega projects. Next, let's look at Brisbane. Okay, so market dwelling value about $926,000. 12-month performance up 7%, so that's pretty good. Rental yields 3.7%, vacancy rate 0.9%, very tight there in Brisbane. Queensland population up 1.1% year on year. Economic depth. So let's have a look at strong on housing finance and labour momentum, upper tier. That would have been upper tier from CommSec's State of the States report in 2025 standards. Then we've got infrastructure. Brisbane Metro, $1.55 to $1.7 billion services commenced in 2025. Cross River Rail, $17 billion. Timeline now towards 2029, probably blow out to 2032 in my opinion. Supply and demand, infill constrained. Obviously, they just don't have a lot of space for people to build in the Brisbane area. You're going to have to go further out, starting to go regional, which we do not recommend. Olympics, decade supports long run demand. We'll see how the Olympics actually does change that market there, because they often take money from the local governments to make sure that they put it into a better Olympic event, and that can definitely affect the way that the market moves there. Rentals market, vacancy rate, like I said, 0.9%. Unit yields, 4.5%, pretty good, offering good cash flow. Population, like I said, 1.9% up year on year. Net overseas migration is a plus, positive interstate flows also. So people are other capital cities to move to for a lot of reasons, I would imagine. Pros, strong market, improving transport network. Cons, basically the completion of these projects, like I said, they're one of the big red flags here, because you just don't know. The insurance based on the climate, floods and things like that can be an issue. Entry yields are compressing with price gains. So as prices go up, obviously the return that you're receiving from a rental perspective is going down. Let's look at Perth here. Perth, so dwelling values, 820, 12-month performance up 7%, very good. Yields 4.3%, vacancy rate 0.6, very tight. Population up 2.4% year on year, very high. So that's very good. Economic depth, top state on CommSec's rankings for that State of the States report. Strong retail, housing, finance and equipment spend. Infrastructure, so they got the MetroNet Thorn Line to Cockburn link, and that's opened on the 9th of June 2025. MetroNet Byford Rail extension, that opens on the 13th of October this year. Supply demand, limited for sale stock. It probably has the lowest amount of stock in Australia in regards to a capital city. Strong demand still. Population surge is the key driver there. Rental market vacancy rate, like I said, probably one of the lowest in Australia at 0.6%. And unit yields are 5 to 6%. So really easy to get something that with, you know, a 10-20% deposit that's going to be positively geared in Perth if you're looking at buying a unit in a cracker of a location. Population up 2.4% year on year, fastest of all the states. So let's look at the pros here. Best growth plus yields combo, big mobility, uplift from the MetroNet. Cons, resource cycle exposure. When they're talking about cyclical exposure here, they are talking about mining, because that is the main driver of employment in WA, and obviously depending on where that is in the cycle, it can go down. Build sector capacity, they can't build enough properties there fast enough, so that's obviously an issue as well. And quick price rises, we are seeing them still moving up quite quickly, narrowing value pocket there, so it might become unaffordable sooner or later. Last one here is Adelaide. So looking at that, 837, 12 is the median dwelling value, 12-month performance, 8%, yield 3.7, vacancy rate 0.6, and then we've got our population up 1.1% year on year. Economic depth, we can see number 2 nationally in CommSec's rankings, strong construction pulse. We've got infrastructure, north to south corridor, the T to D is a $15.4 billion project due 2031. There's a new women's and children's hospital, $3.2 billion. That's under construction already, and it should be done by early 2030. Supply and demand, modest new supply, owner-occupier demand keeps pressure on the entry-level stock. And if we look at rental market, the vacancy rate is still very low, very tight. Steady yields, population 1.1 year on year. Again, that's strong. Pros, consistent growth, tight rentals, diversified economy. Cons, small liquidity, light market, long dated corridor works, and yields below Perth. If it was between this and Perth, I'd still be going Perth. That's me personally. I still just think Perth has more to offer in that respect, and also more to go in regards to the capital growth.